All right. Let's start discussing about the tax planning. And the tax planning question is asked in paper in the section C of the paper, right? Tax planning, a 10 marks question is asked in section C of the paper. So what we are going to discuss, we are going to start attempting the tax planning questions. Keep remember, it's not a topic. Like we can say that capital gain tax, value added tax, inheritance tax, all these are the topics in the taxation. But tax planning is not a topic in the taxation. Rather, a question is asked about the tax planning area. And for surely a 10 mark question is a part of section C, and we can say that 10 mark CRQ is asked in section C of the paper. CRQ stands for constructive response questions. We have 3 questions in section C. One is from income taxes, one is from corporation tax, and the third question is from tax planning. And this tax planning by its name is it's basically dependent upon the other areas. For example, I can tell you the basic example. What exactly do you mean by this tax planning? For example, if you have funds in your pocket and you want to start up a business. Now, the thing is, business can be started. You can start a sole trader business. You can run a shop as a sole trader, or either you can run the same shop by incorporating a company. Examiner will ask that what are the implications if a person starts that shop as a sole trader, what will happen? What are the tax implications? And if the same shop is started by registering a company, by incorporating a company, so what will be the tax implication? So wherein we would be making some comparisons, like we shall be calculating the tax liabilities under both the circumstances. And we will, for example, if it is asked that which option is favorable for a taxpayer. So whether to trade via a limited company, whether to trade via a sole trader, how to run the shop, which option is feasible, which option is favorable for the taxpayer. So the option which is favorable, the option wherein the tax liabilities are lower as compared to other option, that will be the feasible option. So such type of questions, such sort of questions are asked in tax planning. Now, for example, another example I can give you that if you being an employee working somewhere at an employer, and employer is deciding to provide you to accommodate you with your commuting, for example, transportation. Employer can give you a company maintained car, or employer may increase your salary. Now, which option would be better for employer? Which option would be better for that company? So all dependent that while making comparisons, we will conclude that which option is feasible for employer and which option is feasible for the company. So such type of questions are there, the part and parcel of the tax planning. Are you getting my points, please? Would appreciate your kind confirmation in the chat box. So we are basically discussing about the agenda which we are going to cover in these live classes with respect to tax planning. All right, as I guided you that tax planning questions are based on income taxes and corporation taxes. Mainly these two are the areas which are also linked with the tax planning. So if you have studied, if you have covered all the topics of income taxes, if you have fully covered the corporation tax, so you can easily understand the tax planning questions and you can easily attempt these questions. So without wasting further time, let's start discussing the basics, and then we will start performing few questions for tax planning. On this slide, we have a comparison in between the self-employed business and the employee. The self-employed means the person who is doing his or her own business. We are comparing this situation with a person who is employed somewhere, right? Now, if we talk about from the perspective of self-employed persons, self-employed person income head, self-employment income is termed as trading income, whereas employee person would be getting the employment income. So self-employed person income will be reported in the self-employed column, although there are 3 major columns in the income sheet: the non-savings, savings, and the dividend. Both are the part of non-saving column, but these are to be reported separately. If you have earned income from a business, so that is self-employment income, that's a trading income. If you have earned income from employment, so that's your employment income. So the income head is different for both these sources of income. Payment of income tax. How a self-employed person paid tax, that's according to self-assessment. Remember, self-assessment tax return. A tax return is submitted at the end of the fiscal year. We do talk about a reminder form, non-electronic return submission, electronic return submission. So a self-employed person is required to submit its tax things by filing a self-assessment tax return, whereas employer's payment of income tax is deducted from monthly salary according to pay as you earn system. It's employer responsibility to deduct monthly income tax from the employer's salary. So an employed person is not required to submit a self-assessment tax return. For example, if you are in UK and you have only one source of income and that's your employment income, so your tax is automatically deducted and paid to HMRC on a monthly basis. At the end of the tax year, you will not be required to file a separate self-assessment tax return. NICs. Class 4 NIC is applicable to the sole traders, the person who are engaging in their own trade. Whereas for employed person, employee only pays class 1 employee NIC. And employee NIC is termed as primary NIC. Employer NIC is termed as secondary NIC. I repeat, if you are an employee somewhere and you are in UK, you have to pay class 1 employee NIC. Although there are some other NICs which are also paid by employer, but we are talking about employee. So employee pays class 1 NIC, which is termed as class 1 primary NIC. Pensions. Self-employed person, they can contribute towards the personal pension scheme, whereas employee have both the options. An employee can contribute to the occupational pension scheme, OPC. This pension contribution fund is maintained by the employer, or employee person has another option to contribute in the personal pension scheme as well, in the personal pension contribution. So these the two types of pension funds are there for contributing by employed persons, whereas if you are self-employed person, you can only contribute in the personal pension fund. If we talk about with respect to value added tax, self-employed persons who are running their own unincorporated business, they have to get registered from VAT, and after registering with VAT, they can reclaim their input VAT. Whereas if being in the capacity of employee, if we talk about employees suffer input VAT because employer does not claim any VAT. If you and I, if we are employed somewhere, and if we are buying something, and if we are like expending out on acquiring goods or services, then we have to pay VAT. We cannot reclaim that VAT. So here we have few differences in between the self-employed and the employed persons. I can guide you in tax planning question. We shall be practicing questions by keeping all these differences in mind with respect to different situations. And in the first situation, we talked about the comparison of the self-employed person and the employed person. On the next slide, we have another comparison in between the salary and dividend. Now, you being a taxpayer, you being an individual person, if you are employed somewhere, you will be getting the salary. And if you have invested somewhere in the shares, you will be getting the dividend income. What are the things which is to be keep in mind with respect to the salaries and the dividends? Income tax rate. If we talk about the income tax rate, salary being part of non-saving income column, remember, employment income, trading income, pension income, and property income. These four sources of income are recorded in the non-savings income column, or we can term it as other income column. In the income sheet, salary as employment, trading, property, and pension. These four sources are reported in the non-saving column, and non-saving column income is taxed at 20%, 40%, or 45%, whereas dividend is separately recorded in the dividend income column, and to some extent it is exempt. We have mentioned that by 0%. Can you please tell me the dividend exemption available for the taxpayers for the fiscal year 24-25? Anyone remember the amount of dividend exemption? Any one of you, please. What's the dividend exemption? Usman, correctly answered. That's 500. Very right. Plus another question, for dividend income exemption, if we have mentioned it as 0%. So whether it's available to basic rate taxpayer, high rate taxpayer, or additional rate taxpayer, you told that 500 exemption is available on the dividend. To what type of taxpayer it would be available? 500 dividend income is exempt for what type of person? 500 for all. Very right, very true. Irrespective or regardless of the status of person, 500 dividend income is exempt, right? Whether person is basic rate, higher rate, or an additional rate taxpayer, he or she can claim 500 dividend exemption before taxation. Once this exemption is claimed, the rest of the dividend income is taxed at 8.75, 33.75, and 39.35, depending upon the status of the person. Next heading is with respect to NICs paid by individual. If you are getting salary, you have to pay class 1 employee NIC. On previous slide, I showed you that class 1 employee NIC is also termed as primary NIC. So being an employee, you would be paying class 1 employee NIC on the gross cash earning at a rate of 8% and 2%, right? Whereas if you are getting any dividend income, person or the taxpayer does not have to pay any NICs on the dividends received. Yes, there is NIC on the employment income, but there is no NIC on the dividend income received. Next heading, NIC is paid by the company. Here we talked about NIC is paid by the individual. Here the heading is NIC is paid by the company. The company who has employed the persons, employer must have to pay class 1 NIC on gross cash earning plus the class 1A NIC on the net taxable benefits, and both are calculated at 13.8%. By the way, such information with respect to the NICs is also given in the tax rates and allowances. At any point in time, you can open up and you can check all these things in the tax rates and allowances. With respect to NICs, all the things are also there in the tax rates and allowances, which is available on the exam screen on the left-hand bottom side. From here, you can see the information with respect to the NICs. Moving forward, the company who is paying dividends to shareholders, on such dividend payments, company does not pay any NICs on the dividends paid. So dividend do not attract any NICs, whereas salary or the employment income, yes, this attracts NICs. Employer and employer both have to pay NICs on the gross cash earnings and the net taxable benefits. Now, what next is there? What are the corporation tax implications if we think from the perspective of a company? So what if, for example, if you are a company, you have employed like for example, you have employed 50 persons. There are 50 employees in your business and your business is a company business. So what are the corporation tax implications by having the employees on board? So first of all, company profits will be calculated. The salary or the bonuses which are given to employee are the allowable deductions. For any business, any payments to employees are allowable deduction, plus any taxable benefits for a company. Here we are talking about the corporation tax implications for the company. So if company has paid any taxable benefits, that's another allowable deduction. On the salary, class 1 employer NIC is paid on the gross cash earning, whereas on the taxable benefits, class 1A NIC is payable by the employer. And by the way, both of these are also the allowable deductions. So from the company profits, you can see I have shown it is by using the brackets. All these are the deductions. All these are the deductions from the company profits, and taxable profits will be calculated. Thereafter, these taxable profits, either they can be taxed at 19%, either they can tax be at 25%, dependent upon the upper and lower limit and the augmented profits of the company. Resultingly, the corporation tax liability will be calculated. Now, the question arises, we are talking about if you have paid salaries to employees. So on the salaries, benefits, all these things, all these are allowable deductions for the company. So means all these things will be reducing the profits of the company. And if the profits going down, if lower the profits, lower the tax liability. If all these are the deductions from the trading profits of the company, so means corporation tax liability will also go down, because lower the income, lower the tax liabilities. So all these will result in a reduction in profit, hence reduction in corporation tax liability. Thereafter, if a company has paid dividends to shareholders, so what are the corporation tax implications for the company? So keep remember, there are no corporation tax implications for the company who has paid dividends to shareholders, because dividends are always paid from the retained profits from the post-tax profits. Means, first of all, company will pay tax, and after paying tax, the retained profits will be there. Now it's the company's choice, it's the company's discretion whether to distribute these remaining profits in between the shareholders or not. If the company is distributing the amount of the retained profits to the shareholders, so that will be the dividend paid out. So dividend paid out has no corporation tax implications for the company, because dividends are always paid from the post-tax profits, means the profits which are after paying the taxes, right? And if you talk about with respect to the pension contribution, yes, salary has ultimate relation with the pension contribution, but dividends have no connection with the pensions contribution thing. Few statements are in front of you. You can read out and you can think, you can relate. 30 seconds time. If you remember about the relevant earnings is a sum of three things: the trading income, property income, but that is from furnished holiday letting, or the employment income. Relevant earning is any income which is earned by making some efforts. And this relevant earning, you can see employment income is a part and parcel of the relevant earnings. And this relevant earnings is ultimately has a relation with the pension contribution, because this is to be compared with the limit of 3,600, and this 3,600 pound limit is there in the pensions topic. So yes, salary being part of employment income, and it is used to fund the relevant earnings, and then the relevant earnings are to be compared with 3,600 to find the maximum contribution limit. Whereas dividends paid or received have no link with the pensions topic. So here we discussed few differences, few major and important differences in between the salaries and the dividends. A person who is getting salary, what will be the tax implication? We talked about with respect to different perspectives. What will be the income tax implications? What are the NICs paid by the individuals, paid by the company? What are the corporation tax implications? What are the pensions contribution things which are pertaining to both these salaries and dividend? I hope all these points are clear. Can you please confirm whether all these points are confirmed? You are okay with all these things or not? So we can move forward and we can start practicing question. Your kind confirmation is really appreciated. In case if you feel any query and any unclarity, you can stop me. You can even unmute yourself and you can discuss with me. I'm here to guide you. I'm here to make your mind clear, right? Okay, all right. Another difference, as I at the start of this session, as I guided you, let's say if you have pocket in your money, if you have money in your pocket and you want to start your own business, that business can be started as a sole trader, and the same business can be started by registering a company. So what will be the implications? If a person would be starting a business as a sole trader, if a person would be starting the same business as a company, so what will be the tax implications? What is the taxation on profits? So let's discuss this one thing, the first thing with respect to both these cases. So what will be the tax implications? Yes, Usman. So what will be the implication if you start business as a sole trader? What will be the implication if you start business as a company? With respect to first heading, taxation on profits, keep remember, taxable trading profits are assessed on a fiscal year basis. Remember, our business is started and the dates which are pertaining to the fiscal year 24-25 or the fiscal year 25-26, we need to convert the accounting profit firstly into the taxable trading profits, and then those taxable trading profits are assessed on a fiscal year basis. We must make drawing adjustment because we are talking about sole trader business, and if there is a sole trader business, obviously the owner of the business would be taking inventory cash for own use. So such things are termed as drawings. For calculating the taxable trading profits, we need to add back drawings in the accounting profits. Capital allowances calculations are there, but for capital allowances purposes, we must check whether there is any asset which is used for both purposes, the private purpose or the business purpose, and we can claim the capital allowance to the extent of the asset used for business purposes. Personal allowance is available because you have started business as a sole trader, your income will be treated as a trading income. So over here, if you starting business as a sole trader, your income will be treated as trading income and it will be reported to the income sheet in the non-savings column. Whereas if you started business as a company, so your trading income on which corporation tax liability will be calculated. On this trading income tax liability will be calculated. So there's a major difference. If you have started a business as a sole trader, trading income is subject to income tax liabilities. And if you have started the same business as a company, the trading income will subject to the corporation tax liability. And if this income is treated as trading income and it is subject to income tax liability, it will be reported in the non-savings column and it is taxed at 20%, 40%, or the 45%. Whereas I would be discussing all these points with respect to companies as well, but let me finish the sole trader thing firstly. For sole traders, class 4 NIC is also calculated and paid, and this is based on the taxable trading profits. As I showed you that how you can calculate the class 4 NIC, which is calculated on the levels of the taxable trading profits. To some extent, it is nil. To some extent, it is at 6%. To some extent, it is at 2%. All these things, let's discuss from the perspective of a company. Companies' taxable trading profits are assessed on a chargeable accounting period basis. If you remember, a company can prepare accounts for more than 12 months. So there's the accounting period. A company can prepare accounts for equal to 12 months. There's the accounting period. A company can make accounts for less than 12 months. There's the accounting period. So accounting period can be of less than 12 months, can be of equal to 12 months, can be of more than 12 months. But what exactly do you mean by this chargeable accounting period? For taxation purposes, company has to pay tax according to the chargeable accounting period. And chargeable accounting period can be of equal to 12 months, can be of less than 12 months. Chargeable accounting period cannot be of more than 12 months. So whenever a company prepare accounts for more than 12 months, that is termed as longer period of accounts. And we must make adjustment for longer period of accounts. We divide it into the first 12 months and the remaining months. Hope you remember all these things. For company, while taxation on profits, no drawing adjustments in companies because there are no owners, directors are running the business, and shareholders are the ones who have invested in company. Capital allowances, for while making capital allowances, no privately used asset column will be there because there is no sole trader. We are talking about company business. In company, there are no owners who are using assets for personal purposes. No personal allowance available for companies. Corporation tax is at 19% or 25%, dependent upon whether a company is large or not. And no NICs are paid by companies on the taxable trading profits. A sole trader business has to pay class 4 NIC. And if you're running a business as a company, then company has not to pay any class 4 NIC as individual person does pay this class 4 NIC. Hope all these differences are clear. Can you please confirm? We have discussed the first heading, if you start business as a sole trader and if you start business as a company, so what will be the implications there? And these differences are very, very much important because right after discussing on this slide, I will start a practice question where in the same situation, you will find the same situation for exam purposes, for question purposes. Okay, moving forward. If you're running your business as a sole trader, and what will happen at time of withdrawing the funds from the business? Now you have paid all the taxes. If they are retained profits, so what will happen if the sole trader extract money from the business after paying all the taxes? So there will be no tax implications as the taxable trading profits have already been assessed under the income taxes for individual person. Individual person has already paid the tax on the trading income at 20, 40, or 45%. And after paying the taxes, if there are any retained profits, if that person if the sole trader extract those profits, then those profits will not attract any tax implications because the tax amounts have already been assessed as taxable trading profits on which the person has to pay income tax liability. But from a company, from your own company, for example, you started a company by your name and now you are the shareholder. Now you are also working for the company. You are also employee of the company. So funds from a company can be withdrawn in the form of salary and bonus. Also, the funds can be withdrawn from your own company in the form of dividends because ultimately you started the business. You are the owner, you are the shareholder. And if you extract money from your own company as a shareholder, so that's dividend income for you. And for example, if you are also the director of the company, you're running your company business. So being in the capacity of the employee, you can take the salary from company, bonus from company. So from company, you can extract profits, funds in two forms. First one is funds can be withdrawn in the form of salary or bonus. That will be employment income for yourself. And if funds can be withdrawn in the form of dividends, so that will be the dividend income for yourself. For example, now apply the same situation on yourselves. You started a business as a company and you are also running the business. You are the director or employee of the company, number one. You have invested money in the business. You are the shareholder. In the capacity of employee, you are getting the salary and dividend from your own company. So that's employment income for yourself. And in the capacity of as a shareholder at the year end, you can also extract money from your business. You can extract funds from your own business in the form of dividends. So that's dividend income for you. So here we will talk about from both the perspectives, what are the implications for the person, what are the implications for the company. You are the employee of the company, you are getting the salary or the bonus. So what will be the implication for you, for the person, and what are the implications for your company? So it is an employment income for person, hence income tax liability and class 1 primary NIC is applicable on yourself. But that's your company. What will be the implications for the company who has paid employment income to you? Any company who is making salaries, who is paying bonuses, who is paying taxable benefits, all these are the reduction from the company's profits. All these things will reduce the company's profits. So first of all, we'll calculate the company's profits and deducting the salary bonus, taxable benefits on the salary bonus, on the gross cash earning class 1 employer NIC, on the net taxable benefits class 1 A NIC. All these will reduce the profits amount. Taxable trading profits will be calculated on which 19% or 25% tax is applicable, resultingly the corporation tax liability. Keep remember, you are the owner, you are the employer. You extracted funds in the form of salary or bonus, and we discuss both these treatments, what will happen for person, what will happen for company. What next is there? What's the other option for extracting funds from your own company? You can extract funds from the company in the form of dividends. If we talk about the same headings over here, what will be the implications for the person who is getting the dividend income? Dividend income is assessed on a receipt basis, means the actual amount of dividend which received in a fiscal year that is added to the income sheet of the person. And dividend exemption is applicable at 500, and the differential, the remaining taxable income is taxed at 8.75, 33.75 or 39.35%. But over here, your company which has paid you dividend, there are no implications, there are none implications for company because dividend are always paid from the post-tax profits. So on making the dividend payments, there are no implications on the company. Hope this thing is clear. Till now, we have just theoretically discussed all these things, but from next slide, we are going to start practical things, that what will happen if you start business as a sole trader, if you start business as a company, if you extract funds in the form of share, in the form of dividends, or if you extract funds in the form of salary or bonuses. So what will happen? All these things we are going to start from the next slide. But is everything clear till now? Is everything clear? And even if you are unclear to with any single one point, you can please stop and you can ask your queries. Okay, I'm moving forward. I'm giving you 2 to 3 minutes time to read this. A requirement is in front of you. Read this scenario, take 2 to 3 minutes time, then I will start discussion. This is a question, this is a basic question. The basic data is given in front of you. Read the requirement very carefully. Why? Because once we read the requirement very carefully, we can say that 30% question we can solve easily at time of reading the requirement. So if you are getting the requirement, that means you have solved question in your mind. So please take 2 to 3 minutes time to read this data which is available in front of you. All right. So let's start discussing about the requirement of the question. We are required to calculate the income tax, the corporation tax, and the national insurance contribution and decide whether this person should operate business under option 1 as a sole trader and then under option 2 trade via a limited company, and there are three different alternatives for extracting profits from the company business. What are the requirements? What we are required to do? Calculate the income tax, the corporation tax, and NICs where applicable, and decide which option would be favorable for the person in terms of taxes and all that. If person is started as a sole trader, what will happen? And if the same business is operated as a company, so what will be the taxes and the NICs, right? And for a company, three alternatives will be given in the exam. Here is a basic data of the question. N is going to commence self-employment on 6 April 24. There's a start date for the fiscal year 24-25, but is unsure whether to run his business as a sole trader or to trade via a limited company, and the company name will be Amphibian Limited. You are the tax advisor. A client comes to you and asking whether I should operate as a sole trader or whether I should operate as a company. Now you being in the capacity of a tax advisor, you have to advise that client with respect to the income taxes, the corporation taxes, and the NIC's implication for both these circumstances. In either case, in both the cases, N's tax adjusted trading profits for this year end will be 100,000. No need to find the taxable trading profits in the accounting profits. Already the tax adjustments have been done. And after making the tax adjustment, the tax adjusted trading profits is already given in the scenario. And this profit is before taking account of any director's remuneration or employer's class 1 NIC, that's a secondary NIC. Class 1 employer NIC is termed as secondary NIC, right? And class 1 employee NIC is termed as primary NIC. Both these can be deducted while solving the option 2 if trading via limited company. What these two things can be deducted for solving option 2? These may be director's remuneration or the employer's class 1 NIC. Both these can be deducted in option 2 where we're talking about the company business, right? Okay, that means in this question, examiner has asked us, by the way, it's a past paper question. Examiner has asked us whether this person must operate business as a company or as a sole trader, which option is favorable for the person. And that option will be favorable for a person in which the tax liabilities are lower as compared to other option. Now, here we have sole trader, option 1. Keep remember, as we discussed, if we would be operating a business as a sole trader, all these things will be applicable. A sole trader person, a self-employed person, income will be the trading income, class 4 NIC is payable, tax liabilities are payable. So what will happen if a business is started as a sole trader? I can tell you there will be income tax liability for surely. Person has to pay income tax on the trading profits. As a person is running a business as a sole trader, class 4 NIC is also payable. There are no other implications. The requirement was to compute the income tax, corporation tax, and the NICs. And for first situation, there will be only two things, the income tax and class 4 NIC, because corporation tax is applicable to companies. And for the time being, we are not talking about the company business, we are talking about the sole trader business. So only these two things will be calculated if the person would be operating this business as a sole trader. Okay. Income, the taxable trading profits are given in this scenario as 100,000. Let me prepare the income sheet. The first column in the income sheet is with respect to the non-saving. No other income is given. So this non-saving income column can be treated as a total income column. Trading income is given in your scenario as 100,000. In non-saving column, we know employment income is also reported. Property income is reported in the same column. Pension income is reported in the same column. But if no other income is given, and if only talking about the trading income, so the total for this column will be 100,000. I'm following the income sheet thing. From the total column, from the total income, we deduct the qualifying interest, and qualifying interest is an interest which is paid on the 5 types of loans. If no qualifying interest is given, so the net profit amount will be 100,000. Keep remember, today's session, these sessions are mainly for you because we have already covered all the things, all the lectures, all the chapters. Now your knowledge is going to test. From the net income, yes, we deduct the personal allowance, but there is a concept applicable to the personal allowance, that is tapering. Is personal allowance tapered in this situation or not? Quick answers, please. A big no. Yes, true. Personal allowance will not be tapered because person's adjusted net income is not more than 100,000. Yes, net income is 100,000. From net income, we deduct personal pension contribution and the gifted donation to fund the ANI. If the adjusted net income is more than 100,000, then personal allowance will be tapered. If ANI is less than 100,000 or equal to 100,000, personal allowance will not be tapered. If personal allowance is not tapered, we can deduct the whole amount as 12570, resultingly the taxable income. Taxable income for this person for this year is calculated at 87430. Please check your calculation and do make me correct if I have mentioned it wrong. On the taxable income, to some extent, a basic rate band limit would be applicable. From the total taxable income, it's a non-saving income which is not subject to any exemption. It's not saving income, it's not dividend income. It's a non-saving total income which is not subject to any exemption. From the total taxable income, to the extent of the 37,700, tax is at a rate of 20%. 7,540 is computed. From the total taxable income, to this extent, we have calculated tax at basic rate, and on the differential of 49730, this amount is subject to tax at 40%. And resultingly, we are getting 19892, and the sum of these two amounts will be 27432. Please check. If person operate this business as a sole trader, then in that case, tax liability will be 27432. We also know that sole traders are also to be paid. Sole trader business has also to pay the class 4 NIC. Sole traders are also required to pay class 4 NIC. And here we have class 4 NIC is calculated based on the taxable trading profits. To some extent, it's at nil. And to some extent, it's at 6%. To some extent, it's at 2%. Let me write the taxable trading profits. Taxable trading profit for this scenario is 100,000, an amount of 100,000. Let's start calculating. I would be waiting the answers from your side. From the 100,000 to this extent, 12570, there is nil NIC. And from 12571 to the extent of 50270, the difference would be 37,700. On this value, class 4 NIC will be calculated at 6%. What's the value? 37,700 into 6%. That is 2262. Thanks. And on the differential amount of 50271 to 100,000 was a total. What's the difference amount? 49730. Can you please tell? Is that correct? And on this value, class 4 NIC is calculated and paid at 2%. So multiplying this 49730, 2%, that's 10 amounts to 995. And if this person operating business as a sole trader has to pay class 4 NIC, and the sum of these two values is, which one is correct, please? That's 994, or rounding it at 995 plus 2262. 3257 is a total NIC. 3257 is a total class 4 NIC. Let me write over here. And the total tax liabilities, total tax and NIC liabilities in a situation where the person would be doing business as a sole trader. So what's the sum of these two? 30689. So we can mention this amount 30689 over here. So the total tax and NIC liabilities will be 30689. If person operates business as a sole trader, that person has to pay class income tax and class 4 NIC, and the sum of both these amounts is mentioned in front of the requirement under option 1. That's a total tax liability. You can say that that's the total cost of doing business. I can rephrase, although it's a sum of income tax and the class 4 NIC, but we can rephrase this amount. The total tax cost of doing business as a sole trader, the total cost of doing business as a sole trader is an amount of 30689. So that's the total tax cost. Mark my words, that's the total tax cost of doing business as a sole trader. That is an amount of 30689. Moving forward, where it's very interesting situation. We are done with the part 1, like the option 1 of the question. So what's there in option 2? If the same business is operated via a company, so what will be the corporation tax implication and what will be the NIC's implications for company business? And while dealing with company, 3 alternative approaches are there for extracting profits. And on this slide, we have discussed that how you can extract profits from your own company business. Moving forward, here we have option 2. Option 2 is if the same business is operated via a limited company and the company name is Amphibian Limited. First approach for extracting profits from Amphibian Limited is only the director remuneration. Now apply the same situation on yourself. You started a company and you are working for the company. You are the employee of the company and you are taking salaries and the bonuses and the benefits from your own company. So in means this situation is applicable. You have started your own business and you are extracting profits in the form of employment income. So what will be the implications for the person who is the owner of the company? This column. And what are the implications for the company who is paying salaries and bonuses to employee? Both these things will be the total tax cost of doing business as a company in option 1. Option 1 is talking about the person would be extracting funds, extracting profits from the Amphibian Limited in the form of director's remuneration. Okay, let's start reading. The entire profits will be withdrawn as director's remuneration after allowing employer class 1 NIC of 12544, and Amphibian Limited is not entitled to NIC employment allowance of 5,000. The total taxable profits were 100,000. This profit is before taking any director's remuneration or class 1 employer NIC. And both these can be deducted if trade via limited company. Now we are talking about trade via limited company. And the profits amount is 100,000, but from which NIC company NIC is deducted and the entire profits will be given as his salary. My dears, if while solving such situation, I can tell you 4 things will be calculated. Because you are the owner of the company, we need to check what are the implications for the person income tax liability, and person being employee class 1 NIC, because person is getting the salary from the company. Person on the employment income has to pay the income tax. Person on the gross cash earning has to pay class 1 employee NIC. And that's your own company. And for your own company, corporation tax liability will be calculated and company class 1 NIC. Here the NIC is for employee and here the NIC is for employer. Class 1 employer NIC is also to be payable by the company. The sum of these 4 amounts will be the total tax cost. Let me write, that will be the total tax cost of doing business after registering a company, and from that company you are extracting profits in the form of director remuneration only. So these four things will be the total tax cost in this option 2. So if I can give you 2 to 3 minutes time to solve at your own. I need four amounts: person income tax, person NIC, company corporation tax liability, and company NIC. So can you please take 5 minutes time to solve to find all these amounts, and the sum that will be the total tax cost of doing business in this situation. Your time starts now, please. Okay, listen. It is mentioned in the question the entire profits will be withdrawn as salary. But where is the salary amount? What is the salary amount? Read again. The entire profits means the entire remaining profits will be withdrawn as salary. And what will be that amount? Which is after allowing employers class 1 NIC, which is given in the scenario as 12544. If company has earned, company's profits are 100,000. If class 1 employer NIC is paid as 12544. So what is the amount? What is the remaining amount? 87456. So this remaining amount is withdrawn in the form of salary. The entire means the whole amount of remaining profits from the total profits from the 100,000. First of all, company has to pay class 1 employer NIC, which is also given in the question. So the remaining amount of profits, which are 87456, this can be withdrawn as salary. I would be dealing with two situations: the person's tax liabilities and the company's tax liabilities. I will start discussing from the company. If we look at the company's total profits are 100,000, from which company has to pay salary. And we just found the salary amount. What is the salary amount we just found? That is 87456. And paying salary to employees is an allowable deduction for the company. Deducting the class 1 employer NIC, and employer NIC amount is already given in the situation as 12544. If from 100,000 NIC and the balancing figure is given as salary, so what are the remaining taxable profits for the company? Taxable profits for the company are then nil. And if we apply the corporation tax rate, either it could be 19% or 25%. If there are nil profits, so the corporation tax liability will be nil. So read this situation again. The entire profits are given as salary. What profits are given as salary? Those profits which are paying the NIC amount. From the total profits of 100,000, firstly we deduct the NIC, which is given in the situation as 12544, and we found that this amount, which is our entire profits after paying the NIC, so this amount is given to employer as a salary. From the 100,000, if salary is deducted as allowable deduction, if class 1 employer NIC is deducted, then what are the remaining taxable profits for company? Nil, on which no corporation tax liability will be paid. So we just found the corporation tax liability as 0. We found the class 1 employer NIC, which was directly given in the situation as 12544. In a situation where you are running business as a company, both these will be the sum of all these four amounts. All these four amounts will be the total tax cost of doing business as a company, because that's your own company. Your company in this situation has to pay nothing. But let's talk about from the person's perspective, from your own perspective. What you have received from the company? You have received from the company's salary. Salary being considered as employment income. How much salary you have received from the company? 87456. From any company, whenever you received an amount, so that's employment income for person. If no other income is given, so this employment income will be the total in the absence of qualifying interest. Let me write 87456 is the total income, from which in absence of qualifying interest, if nothing is given, so the net income is calculated as 87456, deducting personal allowance, which is not tapered. If 1257 0 is deducted. What's the remaining taxable amount? Can you please tell me the taxable amount? $74886, and on which to some extent basic rate is applicable, and on the differential amount, what's the differential amount? From 74886, that there's a total taxable income from which 37,700 is taxed at 20% and remaining amount of 737,186. Thanks. On this amount, 40% is tax is applicable, 7,540, and 37,186 multiplied with 40%. 14875, and the sum of these two will be the total tax liability 22415. So this person has to pay the income tax liability, and income tax liability is 22415. And let's calculate class 1 employee NIC. Class 1 employee NIC in the column of the person's calculation, and the person has to pay class 1 employee NIC. Class 1 employee NIC. Double E is for employee, ER is for employer. Class 1 employee NIC is calculated and paid on the gross cash earning. Gross cash earning is the sum of salary, bonus, commission, or those benefits which received in the form of cash, and only one income is received in the form of cash. So that's a gross cash earning of 87456. Can you please help me out for calculating the NICs? Class 1 NIC information is also given in the tax rates and allowances. Class 1 employee NIC is calculated this way, and for we have gross cash earning of 87456. From 87456 till 12570, that's nil, then 8%, then 2%. Let me calculate here from 1 to till this amount 12570. On this amount it's nil. From 1 to 571 to the extent of 50270, difference is 37,700 if it is multiplied with 8%. Can you please calculate? 3016, and on the remaining amount from 50270 to the total gross cash earning of 87456, the difference is 37186, on which class 1 employee NIC is calculated and paid at 2%. So what's the amount? 744. The sum of these two will be 3760. Thank you. If this person is running business as a company, then person's income tax liability, person class 1 NIC, and person's company would be paying the corporation tax and class 1 employer NIC. We just found the last amount 3760. Can you please add for these amounts? 22415 and 12544. What's the total tax amount? I'm waiting for your answer. 38719. So that will be the total tax cost of doing business as a company and extracting funds in the form of director's remuneration. So let me write this total tax cost of doing business as a company and extracting profits in the form of director's salary. The total tax cost of doing business in this situation is 38719. Alternative 1, we found a value of 38. Alternative 1 amount we found as 38719. We will find the amount under alternative 2, and we will also find the amount under alternative 3. Then we will compare both these four amounts, this one, this one, this one, and this one. And then we will conclude that how this person should operate this business, whether this business is operated as a sole trader or via a company, and if via a company, then which option is feasible. Is this alternative 1 is clear to all, that what will be the implication for running business as a company? All of you, please. Your quick answers are appreciated. Only two replied. Okay, moving forward. Again, as we are talking about running business as a company, we are talking about option 2, but you will see a difference. In option 2, the alternative 2 for extracting funds, this thing will get changed on the next slide. We are talking about option 2. Second approach for extracting profits from the company is in the form of dividends. So if you are extracting funds in the form of dividends, so that will be the dividend income for yourself. The entire net of tax profits. Read it again. The entire means the whole amount of profit, but what profits? Which are net of tax profits, means the profits which are after paying the taxes. That whole amount will be withdrawn as dividends after allowing for corporation tax. Obviously, the net of tax profits means the amount of tax will be paid on a priority basis, and then from the retained profits will be taken from the company in the form of dividends. As you are running your business as a company, there will be implications for the person. Person income tax liability will be calculated, person's NIC on the same company's corporation tax liability and the company's NIC. But in this situation, we are talking about the dividends. And I can tell you, if you get dividend as a person, there will be no NIC's implications. Let me show you. From the previous slides, we discussed that for company, if we talk about dividends, implications for company are none. On paying dividends, there are no implications for the company. So let me write over here. For company, there are nil implications for paying dividends. And there are, if you are getting dividend income, and with respect to NICs paid by individual, person does not pay any NIC on the dividend received, and company does not pay any NIC on the dividend paid. So for dividend payment, if dividends are involved, then no NIC's implications for person as well as for the company. It's been 1 hour, the class has started. Are you getting this point? Be quick. As we are talking about dividend receipt and dividend payment, and we are talking with respect to NICs, on paying NIC, on paying dividends, no NICs. On getting dividends, no NICs. Is this thing clear? Okay, thank you. Moving forward. Again, 2 columns. We just need to calculate the person and the company. For company, we need to calculate the corporation tax liability, and for person, we need to calculate the income tax liability. Company's taxable trading profits are 100,000, and there is no franked investment income is given for the company. Remember, what's franked investment income? Any dividends which are received from the non-associated companies or from the non-group companies. By the way, what will be calculated by adding the frank investment income into the taxable trading profit? What is that thing? I can test your knowledge. What should I write over here? When we add frank investment income to the taxable trading profits, very right. Hannah, your answer is correct. Augmented profits are calculated. Augmented profits for the company are calculated as 100,000. Why we do calculate the augmented profits? for comparing it with the upper limit and lower limit. And if you remember, for a complete 12 months time period, lower limit is 50,000 and upper limit is 250,000. It is to be prorated due to any of the two possibilities, when the accounting period is of less than 12 months and when there are the associated companies. So if accounting period is of 12 months and no associated company is there, so these limits will not be prorated. Upper limit for this question will be 250,000 and the lower limit for this question will be 50,000. So can we decide what will happen as the augmented profits are more than the lower limit of 50,000, and if this profit is less than the upper limit of 250,000? Can you please suggest what should we do? No? Yes, correct. 25% rate of tax will be applicable because the profits are more than 50,000. 25% rate will be applicable, but as these profit are less than the upper limit of 250,000, marginal relief will also be available, and 25% will be applicable to the taxable profits. Taxable trading profit for this situation are 100,000. So we calculated the tax liability as 25,000. At the same time, marginal relief is also deducted. Can you please quickly calculate the marginal relief? If you remember the formula, can you please quickly calculate the marginal relief? I would request all to please calculate. It's 2250, but how it is calculated? For calculating the marginal relief, you must remember a formula. Upper limit, which is 250,000 in this situation, minus the augmented profits, which are 100,000, multiplied with the standard fraction of 3 upon 200, and multiply it with the taxable profits divided by augmented. Taxable and augmented profits are same in this situation, so I'm taking 1 because 100 divided by 100, so it will be 1. By solving this fraction, you will get an amount of 2250 as marginal relief. And afterwards, the net corporation tax liability for this scenario will be 22750. So here we find the corporation tax liability of 22750. Are you guys okay till here? Only one thing is left to find, the person's income tax liability, and person is getting the dividend income. In this situation, what is the dividend income? First thing to check, what's the dividend income person will get from the company? Can you please check what is the dividend income person will get from the company? Read this statement very carefully and do calculate the dividend income, the amount of dividend income which the person would be receiving from the company. The entire net of tax profits, the entire net of tax profits. Read it very carefully. I guess you guys are not getting the idea. The entire net of tax profits means, first of all, company has profits paying taxes, and the remaining amount, whatsoever is the remaining amount, that will be given to that person as dividend income. So what were the profits of the company? 100,000, which is given in this situation. Let me show you again. 100,000 is the company's profit, from which corporation tax liability, we just calculated an amount of 22750. If from the total profits company has paid this amount of tax, so what is the remaining amount? That's 77250. These are the retained profits. So these are the entire net of tax profits. These entire net of tax profits are given to person as dividend. So that's the dividend income which the person would be getting from the company. Hope this thing is clear. For person, I would be reporting dividend income in the dividend column. For example, we are following the income sheet, the non-saving column, the saving column, and the dividend income. If no other income is given, so let's perform directly working in the dividend income. And if no other income column is given, then the personal allowance is deducted from this column. And this column, after deducting the personal allowance, taxable income is calculated as 64680. Is that correct? Are you getting my points? All of you, please. The first thing to check, what are the dividends? So we found the dividend amount as 77250. Net of tax profits from the total profits, firstly, company paid the corporation tax liability. Afterwards, the remaining amount is distributed to person as dividend income. So over here, we have started performing workings for person. We recorded the dividend income, deducting the personal allowance, taxable income. And we know this taxable income is subject to, that's a dividend income, by the way. Dividend income 500 is exempt. For all taxpayer, if 500 is exempt, it is taxed at 0%. And at the same time, if I ask you to check the basic rate band limit, basic rate band limit is 37,700. Exemption amount do cover this band limit. From 37,700, if we deduct 500, so what's the remaining amount? In the band limit, 37,200 is the differential available. And from the total dividend income from 64680 after the exemption amount, 37,200 is falling in the basic rate band. So over here, basic rate band is fully covered. And any dividend income which is falling in the basic rate band, that is to be taxed at 8.75%. And the differential of from 64680, that's a taxable dividend income, 500 is exempt. The amount which is falling in the basic rate band is subject to basic rate of dividend. And the differential, can you please tell me the difference amount from 64680? 26980, on which tax rate is applicable at 33.75%. So that's the tax liability will be. Can you please rewrite? 9106. And over here, to this extent, if 8.75 is applicable, that will be 3255. By adding all these amounts, you will get the total income tax liability as 12361. So here we found the income tax liability of the person as 12361, and the corporation tax liability is 22750. The sum amount is 35111. So there's a total tax cost. Total tax cost of doing business as a company and extracting funds in the form of dividends. I'm writing this total tax cost over here in the companion. I'm writing 35111, 35,111 is the total tax cost of doing business as a company and person is extracting profits in the form of dividends. Is this thing clear? All right, let's continue. Option 2, trade via a limited company, and the alternative 3 for extracting profits is the mixed remuneration package. What's there? Let's read very carefully. Newt will pay himself gross director remuneration of 8,000 and dividends of 50,000. In alternative 1, the person was getting only the salary, only the remuneration. In alternative 2, the person was getting the dividends only. But in option alternative 3, the mixed remuneration package, person is getting salary from own company and extracting amount in the form of dividends. Amphibian Limited will make a pension contribution of 10,000 into company's occupational pension scheme on behalf of the person. So I can tell you, let me highlight, I can tell you that's the employer, contribution to occupational pension contribution. So employer contribution in occupational pension contribution, it's allowed expense for company. Allowed expense for company means the profits can be reduced, can be deducted by this amount, and it's exempt benefit for person for employee. So I have mentioned the treatment of this employer occupational pension contribution from both the perspective. From company perspective, it's an allowable expense for company because making such contribution is allowable deduction, allowable expense for company, and it's an exempt benefit for employee, with the balance of the profits remaining undrawn within the new company. So if we start preparing the company's pro forma, because for such situation, we also do need to calculate the total tax cost. Over here, we have to find the person income tax liability, person NIC, and for company, we need to calculate the corporation tax liability and the company NIC. Over here, I'm going to start discussing with respect to the company. Company's taxable trading profits are 100,000, from which company will deduct the salary which is given to employee, and the salary amount is 8,000. That's allowable deduction. Company will deduct occupational pension contribution. As I mentioned over here, as I highlight, let me highlight this employer occupational pension contribution is allowable expense for the company. So the amount is 10,000 plus on the salary. Although there is class 1 employer NIC is also payable, because employer also pay class 1 secondary NIC, class 1 employer NIC. My question is there any amount to be paid by the employer in terms of NICs on the salary, on the gross cash earning? Yes or no? What about others? As we are calculating, as we are making company pro forma, from the taxable trading profit, the allowable deductions are salary, the occupational pension contribution, and any other amount which is given to employee or which is given due to employment. All these are allowable deduction. Whether is any class 1 employer NIC, I guess that will be 0. Let me show you why. Look, class 1 employer NIC is also calculated on the gross cash earning, and gross cash earning in this situation is an amount of 8,000, which is a salary. Remuneration of salary amount is 8,000. So that's the reason it will be 0. Why? Because it's below the threshold. Company has to pay class 1 employer NIC if the gross cash earning is more than 9,100. It's below the threshold. So it's 8,000 salary is falling in between this limit. So company will be paying nil NIC. So that's the reason I have mentioned 0 over here. Is this point clear to everyone? If that's not a deduction, that's not payable, because the salary amount, let me write, is less than 9,100. So that's the reason no class 1 employer NIC. After deducting these amounts, what are the taxable profits? What are the taxable profits for the company? Taxable profits for the company are calculated as 82,000. And if we add the frank investment income, that's not available. So the augmented profits of the company are 82,000. Again, accounting period is of 12 months and there are no associated companies. So the upper and lower limit will not be prorated. This augmented profit is more than the lower limit of 50,000, and that's less than the upper limit of 250,000. So that means rate of tax will be 25%, but also a marginal relief will be available. And if 25% tax rate is multiplied with the taxable profits, so the taxable profits for this situation are 82,000. So you are telling me the amount of 10348. Is that correct? No, that will be 20,500 and deducting the marginal relief. Again, for your own practice, I'm showing you the formula that how the marginal relief will be calculated. Upper limit is 250,000 minus the augmented profits, which are 82,000 in this situation. Multiply it with the standard fraction of 3 upon 200. Again, I'm taking 1 because over here we multiply it taxable divided by augmented. Taxable and augmented both are same, so that's the reason I'm taking 1. By solving this fraction, 2520 is calculated as marginal relief. So what's the differential amount? From 20,000, if 2050 is deducted as marginal relief, so what will be the net amount? 17980, thank you. 17980 is a net corporation tax liability. 19780 in the company heading, I have considered the corporation tax liability plus company NIC is paid as nil because over here we discussed this point because when the company employer class 1 NIC is calculated on the gross cash earning, if the gross cash earning is less than the available threshold, so company has paid nil NIC, right? And if we start performing calculation with respect to person, now I would be considering two different columns, the non-saving, the dividend, and the total. Because over here, we are talking about the mixed remuneration package. To some extent, person is getting salary, and to some extent, person is getting dividends from the company. So the salary being employment income is reported in the non-saving column as well as the total, and dividend income is reported in the dividend column as well as the total. Over here, it's about the mixed remuneration package. So that's the reason for the person we are considering two different columns. And if we make the total for the first column is 8,000 and for the other column is 50,000, 58,000 is the total income. If qualifying interest is not there, so the net income is calculated same as above. And if net income is given and personal allowance of 12570 is available, it's not tapered. 8,000 from the personal allowance is deducted from the first column and the differential amount of 4570 can be deducted from the second column and in total from the total column. After these deductions, taxable income. For the first column, it is nil. For second column, it's 45430 and that will be the total as well, 45430. Look, now we want to calculate the income tax liability. For the first column, there is nil income. For second column, that is subject to income tax liability. The second column is for dividend. Dividend income is exempt to extent of 500 regardless of the status of taxpayer, so exempt amount. Then we know one thing that basic rate band limit is 37701. Any exemption amount will reduce this band limit and 37,200 will be available. From the remaining total dividend income, 37200 is taxed at basic rate of dividend, that is 8.75%. And this is how the basic rate band is now fully covered. And the differential of from this dividend income that will be subject to the higher rate of 33.75%. So can you please tell me the remaining amount from 45430? If we deduct total amount, that is 7730 multiplied with 33.75%, that is 2062609. Please make me correct if I have mentioned it wrong. And what's for the second column, 37,200 at 0.875, that is 3255. The total tax liability will be the sum of these three amounts will be the total tax liability. 5863. So we have calculated 5863 as a person income tax liability. Only one thing is left. Person NIC. Person is getting the employment income. You can see in this scenario, person is getting the employment income, and on the employment income, person normally pays NICs. But should we pay any NIC over here, or we should mention it as zero? It will be zero. Let me show you. Class 1 employee NIC is calculated on the gross cash earning, and gross cash earning is only the salary in this situation. And salary amount is given as 8,000. That's the gross cash earning. This 8,000 is less than the available threshold of 12570. So person employee will not be paying any NIC. So that's the reason I have mentioned it as zero. So let me also write this 8,000 is less than the threshold for employee, that is 12570. That is the reason person is paying nil NIC. Hope this point is clear to all. As we have found, as we have calculated all these four amounts, so can you please tell me the sum of these four amounts? Two, 5, 4, 6, 3. I'm going to write this amount 25463. Let's conclude now. How this person should operate this business? I'm looking towards the chat box. We found for these values the total tax cost of doing business under option 1 as a sole trader, and under option 2 as a company, and under company we had three different alternatives, which if we compare all these four values, so what is the concluding point? First thing, person should operate this business as a company and must extract profits in the mixed remuneration package, because that leads towards the lowest tax cost. If we check 25,000, 35,000, 38,000, and 30,000, so this amount is lowest one. So this person should operate business as a company and extract funds in the mixed remuneration package. So resultingly, the lower tax liability is 25463. Finally, we are done with the lengthiest question for tax planning, and hope you also enjoyed all these workings and you never thought with respect to all these things in the comparison tables by taking the comparisons in mind. Can you please give me your feedback? So you can write, person should operate this business as a company and extract profits under alternative 3 in the mixed remuneration package, because that leads towards the lowest tax cost of 25,463 as compared to other options. Okay, all right. Good to know that all of the points are clear. Let's take a 10 minutes quick break. After that break, I will continue the text planning concepts and we will start practicing another question. And that's also very interesting question. So it's uh, right after 10 minutes, I will resume my class. Another question, you should assume today's date is 20th March 24. This date is before start of the fiscal year 24-25. Fiscal year 24-25 starts on 6 April 24. That's before few days before the start of the fiscal year. Assume today's date is 20th March 24. Sammy Smith is the name of a person who is a director of Spark Limited, and the company has given her the choice of being provided with the leased motor car, or alternatively being paid additional director remuneration and then privately leasing the same motor car herself, right? Now, the company is basically trying to accommodate employee for commuting purposes, for transportation purposes. Company is considering two different alternatives. First alternative is providing company's car to employee, and the other alternative is increasing the salary of the employee so that he or she can manage commuting at her own, right? Till now, an important thing is that will be a leased car. Lease means not the company purchase, but the rented car. If the company would be paying a rented car for, surely the company has to pay rent for that car. Okay, what will happen? Let's start discussing the first one, company motor car and the additional salary. The motor car will be provided throughout the tax year, and its provision for providing this car, this provision will result in a taxable benefit of 30340. Yes, we know when an employee gets company maintained car, then a car benefit is calculated and added to the employment income of the person. Over here, we are not required to calculate the taxable benefit because it is directly given in question as 30340. And that will be the taxable benefits for SAMI. And the motor car will have an official CO2 emission of 200 gram per kilometer and will be leased by SMARC Limited at an annual cost of 27720. It will be a rented car, and the rent for the year is annual cost of the rent is 27720. And another important thing is car CO2 emission is more than 50 grams per kilometer. Do you remember what will happen if a car is having more than 50 gram per kilometer? What will happen then? It's a rented car. Remember what will happen when the car CO2 emission is more than 50 gram per kilometer? I can tell you 85% of the rent expense will be allowed expense, and 15% of the lease rental will be disallowed expense. We do study such things in trading income adjustments. If the car CO2 emission is more than 50 grams per kilometer, the rental cost, the annual rental cost, 85% will be allowed expense and 15% will be disallowed expense. The lease payments will cover all of the running cost except for fuel, means no fuel provided to employee, no fuel benefit, and SMARC Limited will not provide SAMI with any fuel for private journeys. And if the company is giving a car to employee for using purposes, in that case, car benefit is calculated and car benefit is directly given in question. But that's a rented car, and car CO2 emission is more than 50 grams per kilometer. In that case, 85% of this annual cost will be allowed expense, and 15% of this cost will be disallowed expense. What will happen if the additional director remuneration is given? As an alternative to having a company motor car, SAMI will be paid an additional director salary, an additional gross director's remuneration of 28,000. Additional means this person is having already a salary. This person is already getting a salary from the company, but for solving commuting problems, company will increase the salary of the employee, and an additional amount of 28,000 will be given during the tax year 24-25. And then she will then privately lease the motor car at her own. Other information. Such information is relevant for each and every part of the question. It's not only linked with director remuneration, but it also has link with company motor car. So whenever you found any definition, you find any heading such like other information, that's not only pertaining to any specific part of the question, there's the general information, right? SAMI's current annual director remuneration is 65,000, and SMARC Limited prepares its accounts to 5th April each year. Now, what's the purpose of giving this information with respect to person? Because we can identify the person's status. Can you please tell whether a person is a higher rate taxpayer, basic rate taxpayer, or an additional rate taxpayer? Can you please tell? Quick answers, please. By looking at the existing salary, what you can suggest? We can say that currently person is a higher rate taxpayer. My question is, if currently the person is higher rate taxpayer, he or she is paying tax at 40%, to some extent at 20%, but from the above, it's in the second band limit, person is paying tax at 40%. Now, let's assume instead of this 28,000, if an amount of 40,000 is further added to the existing salary, will the person status will get changed or it will remain same? Although he would be getting the additional salary of 28,000. If it is added to the existing salary, that will have no impact on the person's status. If 28,000 is further added to the 65,000, person status will not change. On the additional salary, additional tax of 40% will be paid by the person. We are not required to recalculate the tax liabilities from the scratch. No. Based on the additional thing, if the additional salary is given, additional tax will also be calculated at the same percentage of 40%. Now, the other question. If a person is getting the gross cash earnings of 28,000 and employee class 1 NIC, if this amount is gross cash earning for NIC purposes, if gross cash earning is given in question, the existing salary is 65,000. At what percent employee is paying class 1 employee NIC? Can you please answer? At what percent class 1 NIC is paid by employee on the existing salary? Are you getting my point? From 65,000, that's the existing salary. To some extent, it is nil. From this, to some extent, it is at 8%. And the last, to some extent, it is being paid at 2%, right? If an amount of further 28,000 is added to gross cash earning, so what will be the impact on the NIC? Whether it will be recalculated, or any amount which is more than 50271, that is subject to 2% NIC. On the additional salary, what will be the impact on the NICs? Should we calculate NICs from scratch, or we should further calculate the NICs on the additional amount received? So further NIC would be calculated on the further amount received, on the additional amount received, and that will be at 2%. Any amount, for example, instead of 28,000, let's assume if company increases salary of employee by 100,000, the existing salary is 65,000. If 100,000 is further added, if total salary is now 165,000, so that will be the gross cash earning. After 50271, any gross cash earning on which NIC will be paid at 2%. So that's what important for us. That means for such questions, we do not require to recalculate all these things. If the person is a high rate taxpayer and paying NIC at 2% on this amount, if further 28,000 is added to the gross cash earning, NIC percent will not change. It is still payable at 2%. Hope both these points are clear. I want confirmation from your side. For this specific part where the person would be getting the additional salary, additional tax will be calculated at 40%, and additional NIC will also be calculated at 2%, because of any amount after this, the NIC will be calculated at same percentage of 2%. Okay. Now, basically, let me summarize this scenario. There is a person, there is an employee, and the company is considering two different options, whether company should give an employee the car, and that car will be a rented car, and company will be paying that rent to the vendor, or whether under option two, company would be increasing the employer's salary, and on the further salary, what will happen, right? So that's two different alternatives, whether company can give a car to a person, or whether a company must increase the salary of the person. Usman, you are asking that 65,000 as salary without additional 20. Yes, current salary. That's the current salary. Read it very carefully. Other information, Sammy's current annual salary is 65,000. That is irrespective of this or this. The current salary of the person is 65,000. Your understanding is correct. Okay. Let's have a look at the requirement A of the question. Read it very carefully. We need to advise Sammy Smith, means we are advising person. We are advising the taxpayer. We are advising the individual person. Advise Sammy Smith of the income tax and NIC's implications for the tax year 24-25. Let's change it 24-25. If Number one, she is provided with the company motor car, and number two, if she receives additional director remuneration of 28,000. So I have prepared a format for solving. We are advising Sam Smith under both these situations where the company would be providing company motor car and where the company would be increasing the salary of the person. If car is provided, then the car benefit will be 30340, which is also given in this scenario. And if the additional salary is given, the additional salary amount will be 28,000. So what will be the income tax and NIC implication for Sammy Smith under option 1? And what will be the implication and NIC's implications for Sammy Smith under option 2? Means on this slide we are only calculating both of these things for person, for the taxpayer, for individual person under both these circumstances. What will be the income tax liability? If this benefit, if car benefit is added to the employment income, so ultimately income will go up, income will increase. Increase in income is increase in income tax liability. If there is an increase in income, ultimately income tax liability will go up. We are talking about employee. Sammy Smith is employee. We are talking about employee NSE. Is there any impact on employee NSE or not? Car benefit, it's a benefit. On what employee pay class 1 NIC? On the gross cash earning. Employee does not pay any NIC on the benefits received. So this has no impact on employee NICs because on the benefits, employees does not pay any NIC. On the benefits received, employer's responsibility is to pay class 1 NIC, but not the employee. So for employer, there and with respect to NIC, there will be no impact on getting this benefit because on benefit, employer pays class 1A NIC. What will be the impact to the income tax liability if this car benefit is added to employment income? So employment income will go up by this amount, and this will result in the increase in income tax liability by 40%. So income tax liability will increase by 40% because if this is a benefit, this benefit will be added to the employment income. If employment income is increasing, ultimately the income tax liability will be increasing. But at what percent? At the same percentage based on the status of the person. What is the amount? $30340 into 40%. 12136 is an increase in the income tax liability. If this amount of car benefit is added to employment income, then income tax liability will go up by 40%. We are not calculating the revised liabilities. We are just considering this scenario if car is provided to employer. So what will be the impact on the income tax liability? If this amount is a car benefit, benefit will also increase the employment income. If this amount will increase the employment income, the income tax liability will go up by the 40%, and 12136 is the increase in the income tax liability. Over here, let me write properly. Employees do not pay any NICs on the benefits received. So it will be 0. And the combined effect of these two will be if car is given to employer, the employee liability will go up by 12136. Is everyone clear on this? Yes, Moja, Hana, Mahir, Shahid, Usman, all of you, Yusufu, are you guys clear on this? Good to know. You are very clear on this. Good. What about others? All right. The same things will be checked, will be considered for other half of the question. With respect to this person, what will be the implications if person gets increased salary of 28,000. By the way, that's a salary. 28,000 now it is considered as gross cash earning. If gross cash earning is added to employment income will go up. If increase in employment income, increase in income tax liability, and that's the gross cash earning, and it will have an impact on the NIC as well, because we are talking about employee NIC. On getting the NIC, on getting the additional salary, that's a gross cash earning, and employee has to pay class 1 employee NIC on the additional salary received. Amount of this benefit, amount of cash earnings are 28,000. Can you quickly calculate what will be the impact on the income tax liability and what will be the impact on class 1 employee NIC? Can you quickly calculate? If an amount of 28,000 is added to the employment income, so employment income will go up and tax liability will go up by 11,200. Right? So there's an increase in the income tax liability on getting this additional salary. And we have already established the percentage that if any increased amount is received by the person, so that will have an impact on the income tax liability. And over here, it's a gross cash earning. It will also impact the NIC of the employee. And on this amount of 28,000, additional NIC is to be calculated at 2%. That will be 560. The sum of these two amounts will be the total income tax and class 1 NIC on the additional salary received by the employee, and that the sum would be 11,760. Perfectly answered, Mahir. In part B of the question, we are required to advise. Now the advice is for company. Advice is Mark Limited of the corporation tax and NIC implications for the year ended 5th April 25. If I have changed the date, so over here, let's talk about financial year 24. If company provides Sammy Smith with the company motor car and if pays additional salary as 28,000. Two notes are also relevant. You should assume that the company's augmented profits are less than the lower limit of 50,000. That means if the augmented profits are less than the lower limit of 50,000, that means the tax rate will be, it's for deciding the tax rate will be 19%. Because if the augmented profits are less than the lower limit of 50,000, then the tax rate will be 19%. And you should ignore the value added tax implication and the NIC employment allowance for the company. Here we are going to talk about with respect to the SMARC Limited. What will happen if SMARC Limited provides employee with the company motor car, resultingly a car benefit? And what will happen if company is paying additional director remuneration to employee and paying additional salary of 28,000? If we talk about number one, for providing car, expense will increase, but ultimately when the expenses are increasing, corporation tax liability will be decreasing, because increase in expense, reduction in corporation tax liability both have inverse relationship. When expenses are increasing, profits will go down. Profits going down, the corporation tax liability will go down. What are the expenses involved in this situation? Can you think? If you, being a company providing any employee with a car, so what sort of expenses will increase? Think from the perspective of a company. 30 seconds time. I guess two type of expenses will increase in this situation. Number one, car rental expense. And number two, because you being a company providing employee with a benefit, and on providing the benefit, HMRC also will ask to pay class 1A employer NIC, because it's the responsibility of the employer, it's the responsibility of the company, of the employer to pay class 1A NIC to HMRC on the net taxable benefits. So two type of expenses will increase. Number one, car rental expense, and number two, class one, employer NIC, which is on net taxable benefits. And net taxable benefit in this situation will be 30340. So two type of expenses will increase. Although the total rent expense for the year is 27720, but due to CO2 emission, which is more than 50%, 50 gram per kilometer, this value allowed expense will be 85%. You cannot deduct whole amount from your trading profits. So what will be the allowable expenses in this allowable expense in this situation? That will be 85% of the total amount. So car rental expense will be 27720, from which 85% can be deducted as an expense, 27720 into 0.85. So the total allowable expense will be 23562. And can you quickly calculate class one employer NIC that's in front of us? If additional benefit of 30340 is paid, is given to employee, if that's a net taxable benefit on which employer has to pay class 1A NIC at 13.8%. 30340 into 13.8%. So resultingly, we are getting an amount of 4195. I guess that's 4187, Usman. Can you please recheck? What's the total expense? What's the total increase in expense? 27749. We are talking with respect to the company. If company is providing employee with a benefit and that's a rented car, company would be paying rent to the vendor, to the car vendor, and the total allowable expense of from the total 85% is allowable expenses, which can be shown in the accounts because car CO2 emission was more than 50 grams per kilometer. And on providing the benefit, employer company has to pay class 1 ANIC to HMRC. So that's the total increase in expense for providing this thing to employer. And we know one thing, that if there is increase in expense, that will there will be a reduction in profits. And whenever there is reduction in profits, ultimately the corporation tax liability will go down. Increase in expense, comma, reduction in profits, and resultingly the decrease in corporation tax liability. And if the total expenses are increased by 27749, if multiplied, if there's an increase in expense, profit will go down. Profit will go down by the same amount. If profits are going down by the same amount, if multiplied with the corporation tax rate, which we have already established, that is at 19%, because the company's augmented profits are less than the lower limit. So resultingly, we can say that if increase in expense, that will result in reduction in corporation tax liability by 5272. Thinking on the same lines, I would request you to quickly solve the second part. What will happen with the company if company provides additional salary to employee and the salary amount is 28,000? Same things is to be calculated. There will be an increase in expenses. What sort of expenses will now increase? Number one, paying the additional salary expense. Number one is salary expense, 28,000. And salary is gross cash earning. And on the gross cash earning, employer company has to pay, that is class 1 employer NIC. On paying the additional salary, employer has to pay class 1 NIC at 13.8%. So that's another. Let me write class 1. Oh, okay. Let me rewrite over here. That was a class 1A employer NIC. That was class 1A employer NIC, which is calculated on the net taxable benefits. Over here we are calculating the class 1 employer NIC. That's class 1 employer NIC on gross cash earning. Employer has also to pay the class 1 employer NIC on the gross cash earning, and the gross cash earning in this situation is 28,000. And let's calculate on the amount of 28,000 if 13.8% is multiplied. So what's the resulting amount? Can you please check? I guess that's 3864, not 2608. Can you please check it again? Okay, thank you. 31864 are the total expenses in providing, in a situation where the employer would be providing the additional salary to employee. Again, if there is increase in expense, resultingly profits will go down, and if profits are going down, corporation tax liability will go down. If increase in profits by 31864 multiplied with 19%, so that will be, there will be a saving reduction in the corporation tax liability by 19%, and the amount is 6054. Yes, Usman, you may please ask. Okay. Current salary, the current salary which the company is given to employ is 65,000. Now, listen very carefully. We are not calculating from scratch. On this existing salary, Smart Limited is also paying existing situation, in current situation, on paying the salary of 65,000, Smart Limited has already been paid class 1 employer NIC, which is to some extent, okay, the basic salary was 65,000. From 65,000 till this extent, it's nil. And on the differential, company is paying NIC at 13.8%. How much is the additional salary given to employee? That's 28%. On the additional salary, company would be paying additional NIC at 28%, at 13.8%. All right. Good to know that you got the point. Yes, Anna, please ask. Uh, I will deduct, don't worry, I will deduct as we are, by the way, we are not creating a proper format over here, but ultimately we know that if there is an increase in expense, any sort of expense, ultimately profits will go down. If even if you prepare the company format, profit will go down and corporation tax liability will be saved by this amount, because we have already considered the impact of both these expenses. You're asking that why does employer NIC is not deducted from corporation tax? Isn't it its expense too? Yes, you are correct, but we are not recalculating all the things from scratch. We are just considering the current situation which is given in the scenario. We are not bothered to recalculate all of the things from scratch. Within the given scenario, what will happen? So that's according to tax planning. That's according to the things which are given. Yes, we have considered company increased the employer's salary, and on increasing employer's salary, this expense, this NIC is paid to HMRC by the company. The other amount which the employer has paid, so that's from the employer pocket. So why should I deduct that amount from the corporation tax? If you're talking about class 1 employee NIC, so class 1 employee NIC payment is a responsibility of the employee. So it must not be deducted from the corporation tax from the company's profits. Are you getting my point? Okay. So we found that if this is the case, if the company increase the employer's salary, if provided car, so resultingly the corporation tax liability will go down by 5272, and if company increase the employer's salary, the ultimate corporation tax liability will go down by 6054. There is another requirement pertaining to this question. Requirement C: determine which of the two alternatives is the most beneficial from the point of view of the SMARC Limited. Now you are a company, you are a SMARC Limited. Which option is favorable for you? Whether to provide employee with car or whether to increase the employee salary? Which option is favorable for you? Examiner is asking to conclude the things with respect to the company. So whether company should increase the employee salary or whether should company provide the employee with the company car. The decision will be based on the net cost for company. We should calculate the net cost for the company if company provides car, and we should also calculate the net cost for company if paying the additional salary to employer. So any amount which is lower than these two, that will be the favorable option for the company. Now, be with me very carefully. If providing car, two cash outflows are there. Number one is rental payment. In terms of cash outflows, if you look, there is a rental payment and there is NIC payment by the company. Let's calculate the total amount. Can you please tell me the rental payment? A key point over here. So that's the reason I'm asking from you guys. What's the first outflow in this situation? Should we consider 85% of the amount or should we consider the whole amount of rent? Should we consider 23562 as outflow or should we consider as 27720 as outflow? What others suggest? From accounting perspective, 85% was the allowed expense from the total cost. But when it comes to the actual outflow, no. Okay, let me guide you. While deducting expense from the accounts as allowable expense, we consider 85% of this amount. But will our vendor will accept this amount or we must pay vendor the whole amount of 27720? We are talking about the actual cash flow. Vendor will not accept this thing that according to your accounts, you deducted an amount of 23562 and you are also paying me the same amount. No. Vendor of car will get the whole amount of 27720. From this, you are allowed to deduct to this extent as allowable expenses. But with respect to the vendor payments, you need to pay the whole amount of 27720. So there's the first outflow, the actual outflow. All of you, Moja, are you clear on this? That 85% was allowed for from your exam perspective, from your accounts perspective. But the vendor would be taking the whole amount as promised, as rental payment. What is the second cash outflow? In this situation, this amount is paid to HMRC. So that will be a cash outflow by the company in total, that is 4187. So what's the total amount? What's the sum amount? Can you please calculate? Can you please add up? So 31907 is the total cash outflow. From the cash outflow, we on the previous slide, we calculated the tax saving. In this situation where the company would be providing a car to employee, ultimately tax will save by 5272. So the net cost for the company will be the 26635. And in the same manner, paying additional salary, there will be two outflows. One is salary payment, and salary payment is an amount of 28,000. And in this situation, NIC, which is paid to HMRC on the gross cash earning, we calculated an amount of 3864. The sum of these two amounts will be 31864. That's 28,000. And we have already calculated the tax saving in this alternative is that's 6054. And the net cost for the company is 25810. Thank you. So if you're a Smart Limited, what's in your favor? Would you like to provide employee car, or would you like to pay an increased salary to employee? What's beneficial from the perspective of company? Yes, paying additional salary is favorable for the company because it's resulting in lower cost as compared to other option. By the way, if same thing is asked from the perspective of person, would you like to take car from the company, or would you like to take the additional salary from the company? Then we must move back and we can check, we can compare both these amounts. 11760 is a total tax and income tax liabilities for employee on in getting the additional salary, and 12136 is total liability and NIC in a situation where the person would be getting car. No, Usman. Again, this 11760 is lower for employee as well. Although it's not the requirement of the question, additional salary is beneficial for employee as well. Although it was not asked in the question, but we just randomly thought about it. So if the same thing is asked for the person, again, this option is favorable for person because we're in the total liability, tax liabilities, and the NIC sum is lesser as compared to other option. And same case with the company over here, if we compare both these values, the net cost for the company is lesser in option 2, wherein the company is increasing the employer salary. Hope all these things are crystal clear till now. Would like to take your feedback. Are you getting all these points? Don't worry, I would be sharing the file, the PDF file of this one as well after the class, after this session. Don't worry. Okay. Another situation, very interesting situation. Here we have married couple tax planning. You can see the first question we attempted is with respect to whether it's starting business as a sole trader or as a company. Second situation was with respect to the providing car or increasing the salary. Third situation is with respect to a tax planning of a married couple. Here is the current situation. Here is a proposed situation. I'm giving you 5 minutes time to read the current situation. Afterwards, I will switch to other slide for proposed situation, and the requirement is also available on the next slide. Your time starts now. You can read. In this situation, it's about married couple tax planning. H and I are a married couple. Current situation, H is currently is self-employed person, and his forecasted trading profit for the year ended 5th April 25 is 100,000. He does not have any other income. It's all about the first person. From here, it's about the second person. I does not have any income, although she does a considerable amount of unpaid work for husband's business. Currently, in couple, only husband is doing business, and the forecasted profits are 100,000. And his wife does a considerable amount of unpaid work, although she works for husband's business, but not getting any income from the business. So that's the current situation. What's the proposal? Couple comes to you and asks you that you are a tax advisor, and they want to know, couple wants to know what if it would be beneficial to form a partnership at the start of the fiscal year 24-25, with profits being shared 75% to husband and 25% to wife, whether there would be overall tax saving or not if they convert this sole trader business into a partnership business. Principally, there is no concept of partnership business taxation. In a partnership business, all the partners are considered as separate sole traders, but still, they want to know whether there would be any tax saving or not. So let's start performing. In current situation, H is only one person who is doing business, and in current situation, there is only one owner of the business. If a person is engaged in self employment, is engaged in trading income, for that person, income tax liability will be calculated. For self-employed person, class 4 NIC will be calculated. In current situation, only one person, one owner is there. So both of these things will be calculated for that person only. And we know one thing, that if there will be two owners, then both these things will be calculated for H and I, for husband and wife. Over here, we will calculate the person's income tax liability and person's class 4 and NIC liability. And the same things for wife's income tax liability and wife's class 4 NIC, because from partnership business perspective, each partner is considered as a separate sole trader. If both these persons are treated as separate sole traders, so both have to pay income tax and class 4 NIC separately. Okay, let's start performing. As person is getting the trading income, which is in this situation is given as 100,000. No other income is given, so there's a total income. No qualifying interest is given, so that's the net income. We are performing all these workings only for this person, because currently in current situation, one person is operating business and does not have any partner. From the total income, what we deduct is that is personal allowance. 12570 is a personal allowance, and the taxable income is calculated as 87430, which is subject to taxation. From this total value to this extent, tax rate will be 20%, and on the differential of 49730, that is subject to tax at 40%. First amount is 7540. Can you please tell me the 49730 into 40%, 40% of the remaining amount? 19892. The total tax liability for this single owner person is, the sum of these two will be, be quick, my dears. 27432. 27432 is the liability of the person. And as this person is operating a sole trader business, class 4 NIC is also payable, and class 4 NIC is payable on the taxable trading profits, and taxable trading profits is forecasted trading profits for the year are 100,000. At times, what student make a mistake, that is, they do consider the taxable profit as taxable income. No, if you consider this amount over here, you are making a mistake. So there's a taxable income. For class 4 NSE purposes, we must check the taxable trading profits, which are 100,000 in this situation. Yes, Usman, you may please ask. What's here in your mind? Tapering of personal loss will not be applicable, as a net income is not. How we can check the tapering? For tapering, we require ANI. ANI is calculated as net income less personal pension contribution and the gift donations gross amount. Total net income in this situation is 100,000. If no pension contribution is given, no, that's not the scenario. Transferable, you are talking about transferable amount of personal loss, that's not applicable. because currently other person does not have any income. So transferable amount of personal allowance is applicable where both these conditions are met. What are both those conditions? Both person must be the basic rate taxpayer, and one of them must have net income of less than 12570. Over here, first condition is not met because first person is not basic rate taxpayer. This person is higher rate taxpayer. So transferable amount of personal loss concept is also not applicable. And even though if it is applicable, the other person does not have any liability. So what's the purpose of transferring the personal loss? So if the other person is not having the income tax liability, so which amount will be reduced by the transferring the personal loss, right? Moving forward. I was telling you that taxable income for this question is 87430, but class 4 NIC is calculated based on the taxable trading profits, which are 100,000. At times, students do make a mistake. They consider this taxable income as taxable trading profits. That's not the case. That's not the scenario. If you are taking 87430 for calculating the class 4 NIC, for surely you are making a mistake. From 1 to 570, to this extent, class 4 NIC is calculated at 0. Let me erase all these things. As we are calculating class 4 NIC, let me highlight the relevant space. Then from 1 to 570 to 50270, it's at 6%. From 1 to 571 to the extent of 50270, differential is 37,700, at which it will be calculated at 6%. Can you tell me the amount? 2262. Okay, good. Then from 50271 to the extent of 100,000, the total taxable profits, the difference is 49730, at which 2%. 995. Thank you. The sum of these two amounts, 3257. In current situation, where a single person is operating the business, the total income tax and class 4 NICs are, what's the sum? 30689. Thank you. We need to find the overall tax saving under the proposed situation. Currently, the person, when one person was operating the business, the total tax liability was 30689. 30689. From this, we will deduct the sum of these two, wherein according to proposed situation, both these persons will run the business as partners. The amount which is calculated over here, it will then be compared with the existing situation, tax liabilities and NICs. And then we will conclude whether it's beneficial or not to convert this sole trader business into a partnership business. But for solving other half of the question, as you can see, the proposed situation that if they convert this business into a partnership business with the profit sharing ratio of 75% to husband and 25% to wife. I would be solving over here. I am going to solve for husband, and over here I'm going to solve for wife. If person, now the income sheet would be prepared for both the persons. If 75% is for husband and 25% is for wife, so what will be the trading income for husband? Can you please calculate? For husband, in the income sheet, non-saving column, trading income will be 75,000. 100,000 into 75%. No other income is given, so that's the total income. No qualifying interest is given, so that's the net income. From the net income, if we deduct the personal allowance of 12570, then the taxable income for this person is calculated at, from 75,000, if we deduct 12570, that is 62430. And on this amount, tax bands are applied at 20%, and the difference of difference of 24730. This amount is taxed at 40%. Can you quickly calculate the total tax liability? 7540, and this amount is subject to tax at 40%. That is 9892. Please make me correct if I'm doing anything wrong. And the sum of these two, as you're telling 17432. Okay, fine. 17432 is a total tax liability for husband. 17432. Let's calculate the class 4 NIC. Class 4 NIC, now the taxable trading profits are 45,000 in this situation. From this, 75,000 for husband. Taxable trading profits are 75,000 in this situation, which are pertaining to husband. From this value to this extent of 12570 on this amount, there is nil NIC. And from 12571 to 50270, the difference is 37,700, at which it is calculated at 6%, and that will be 2262. And on the additional amount, from 50271 to the total taxable trading profits of 75,000. So what's the difference amount? What's the difference amount? 24730. At this, NIC is calculated at 2%. That is 495. And the sum of these amounts will be Hannah, you are telling something wrong. The total class 4 NIC is 2262 and 495. Yes, that's correct. 2757. Okay, let me write 2757 and 17432. The total income tax and class 4 NIC in this situation for husband will be 20189. Thank you. Let's calculate the same things for wife. For wife, if we prepare the non-saving income column, wife's share is 25%. So that will be the trading income, no other income, total income, and in absence of qualifying interest, that will be net income. If 100,000 is 25% is 25,000. For wife would also be claiming the personal allowance of 12570. Afterwards, a taxable income for wife will be calculated as 12430. And this amount is within the basic rate band. So tax liability will be at 20% because wife's taxable income of 12430 is less than 37,700. So wife's income tax liability will be 2486. Are you guys clear till here? Any questions, please? Are you getting my points? Okay. Let's calculate taxable on the taxable trading profits. Let's calculate class 4 NIC. Class 4 NIC for wife is being calculated on the taxable profits of 25,000 from initial value of 12570, nil NIC is applicable, and from 12571 to the extent of the total taxable profits. Amount is 12430. On this amount, 6% class 4 NIC is calculated as, if I'm not wrong, that will be 746. Thank you. 746. Let's conclude over here, 746 and 2486. Total liability and NIC amount will be 3232. And now, as both these persons are doing business in partnership, both would be paying the taxes and the NIC liabilities. The sum amount will be 3232 and 20189. Okay, that is 23421. Where the person was doing business as a single owner, the tax liability was 30689. And according to proposed situation, we calculated the tax liabilities and NICs for both the persons, and the sum amount is 32421. Check whether is there any tax saving or not. Yes or no? I have mentioned it incorrectly. That's 23,000. We calculated correctly, but over here I made a mistake. That is a typo error. The sum of these two amounts is 20189 and 3232. That's 23421, a transposition error. So I have rectified from existing liability of 30689. If we deduct the proposed liability from the when one person was doing business as a single owner, that liability was 30689 mentioned over here. And when a revised according to the proposed situation, the revised liability is calculated as 23421. So you can see there is a tax saving by, you are telling me, the difference of 7268. 7268. So now we can conclude, yes, it's beneficial from the couple's point of view. That's beneficial to convert the business according to this proposed situation, convert the sole trader business into a partnership business. So ultimately, there will be a tax saving can be done by 7268 if they convert this sole trader business into a partnership business. Are you guys clear on this? Last thing for today's session, I can tell you a direct method, rather solving current situation, rather solving proposed situation, rather wasting too much time on such scenarios. Now I can tell you a direct method which you can follow, but which you can adopt. But keep remember, please do not make any mistake while adopting the direct method. And if you are unsure that whether you will perform correctly or not, I will suggest you to follow this longer method. And if you are sure you can apply the shorter method directly without making any mistake, then it is preferable to adopt this shorter method. Logically speaking, if a person's income is going down from 100,000 to 75,000, if the person there is if there is a decrease in the income of the person, so what will happen? What will be the impact on the income tax liability? Income tax liability will go up or not? Either it will go up or either it will go down. If the decrease in income, the decrease in income tax liabilities. Agree? Not only the income tax, but also the class 4 NIC. Over here, we calculated class 4 NIC on 100,000, and for this person over here, we calculated class 4 NIC on 75,000. So I can tell you that if there is a reduction in the income, so there will be reduction in the tax liabilities and class 4 NICs. So we are talking about H, income tax liability reduced. Can you please find the reduction in the income tax liability? If person income has reduced by 25,000, previously he was getting 100,000, now he is getting 25,000. So income tax liability will go down by the difference amount of, can you please check? Can you please tell? Yes, I'm waiting for your answers. If there is a decrease in income, so resultingly there will be a decrease in the tax liability. At what percent tax liability will be saved? 40%. Because over here the person was paying tax at maximum rate of 40%. Over here in the revised situation, the maximum tax rate is 40%. If the income has decreased by 25,000, so tax will go down by 40%. So that's resultingly 10,000. There's a tax saved. For H, we are finding the tax saved. There is also class 4 reduced. 25,000 is a reduction in the income, and at which over here the person was paying class 4 maximum at 2%. And in the proposed situation, the class 4 is also calculated maximum at 2%. So this will reduce by 2%. Can you please check? 25,000 into 2%, 500. Overall tax saved for H, as we have calculated the tax saved. But as the other person is entering in the business, till the time the other person was not getting any salary, that person was not paying any liabilities and was not paying any NICs. But as now the other person has entered in business, so for other person there will be tax cost. For husband we calculated tax saved. For wife we will calculate the tax cost. Income tax liability for wife will be, if this portion is solved, you will get 2486. And for wife, there will be class 4 NIC, and class 4 NIC for wife is calculated as 746. If from the net saving and net cost, the net of difference will be the tax saved. Can you please check? Tax saved, whether we are getting the exact amount or not. The same amount as we found there, are we getting the same amount over here or not? Yes, we are getting the net of value as 7268, because when one person is entering, there is a reduction in the amount. So other person is entering in the business, so that person would be paying. Let me rewrite over here. The sum of these two, 2486 and 746. The total tax cost for this person while entering in the business will be 3232. And from the total tax saved and the total tax cost, the net difference will be the tax saved, and tax saved amount will be the same as 7268, the sum of these two. Okay, sure. I'm going to highlight this area. So that's according to, I can refer it at alternative method. That's alternative method. Is everything clear? All of you, please. So the person whose income is reduced, saving the tax liabilities and class 4 NICs, and the person who entered in business, that will result in income tax and class 4. So resultingly the tax cost, net saving and net cost, the overall tax saving is 67268, and it's exactly the same amount as we found by following the longer method. And but over here we have an alternate method, which is a shorter one, that will gonna save your time in exam. There are multiple other questions and discussions are yet to be covered in the text planning area, and we'll continue it from the next lecture. Take care and bye.